Solana and these 5 ecosystem altcoins are about to massively explode. Plus, there's a bonus. I'm about to show you why this is easily the most obvious trade in crypto for the next 30 or 60 days. Stop me if you've heard this before. The best trades are the ones hiding in plain sight. Just a year and a half ago, most of the market missed the clearest signal in crypto, the Bitcoin ETF. Even as filings were stacking up, price action lagged. Sound familiar? Look at Solana now. And everyone second-guessed what was about to happen. But when the approval finally came, when BlackRock finally put their ETF application in, the dam burst open. Billions and billions and billions of dollars flowed in. Bitcoin hit new all-time highs. And a handful of investors who were early rode the single easiest trade of the cycle. You saw it with the Bitcoin ETF and then the Ethereum ETF. Those trades were powerful. Well, Ethereum not so much, but it's catching up quickly because both had to eat months of forced selling from Grayscale after the trust was converted into an ETF. But with Solana, there's almost no Grayscale supply overhang here. We'll tell you guys more about that in just a second. But right now, we're staring at an even better version of that same setup. This time, it's Solana. The market is sleepwalking into ETF Summer, but you guys are not, because you guys are a smart audience who watches the best content. And the signals are so obvious, it feels almost unfair. I think the real opportunity is in a handful of category leaders, with real revenue riding to the next ETF tidal wave of institutional investment. If you guys know where to look, you can see the capital rotation already starting. Today, I'll show you why Solana is the next big play, what the market's missing, which tokens and protocols are about to pull massive multiples, and how to secure your spot before ETF Summer turns up the heat. Let's start with the headline that almost nobody is pricing in. Right now, top analysts are putting the probability of a spot Solana ETF being approved by the end of this year, listen to this, at 90 to 95%. It's almost a certainty. Invesco and Galaxy have already filed, and VanEck's Solana ETF is now officially listed on the DTCC under the ticker VSOL. This is a big deal. This means it's likely happening, and I expect BlackRock to slip their application at the last minute as well. The SEC is signaling that the regulatory clouds are clearing, even reversing old security claims, and prepping the legal path for new TradFi crypto products. ETF approval is the capital concentration event. When Wall Street finally rotates into Solana, the majority of allocators, funds, RIAs, family offices, they're gonna come rushing in, guys, like nobody else. If you wanna know what happens next, just look at the previous ETFs. After a bit of a slow start, we saw billions in new capital inflows, leading to market cap explosions, right? You were there, probably. We saw this. But here's why it's different this time. Solana could get a setup for an even stronger ETF launch than Bitcoin or Ethereum ever saw. Why? Because for the first time, a major crypto ETF is going live when the underlying asset is still trading at a fraction of the valuation of ETH and Bitcoin, right? Ethereum, for example, is still 4 times Solana's market cap. If Solana attracts a similar wave of ETF inflows, but starts from a much smaller base without any Grayscale supply overhang to absorb, it's got a clear runway for explosive price action that could catch a lot of the market off guard. Guys, I ran the numbers on Solana, and here's what I found. When it comes to daily active users, Solana is literally running laps around the entire crypto industry. The network now regularly reports between 3 and 5 million daily active users, a figure that far outpaces Ethereum's mainnet, which struggles to break 500,000 people, and the combined total of all major Ethereum L2s. This narrative of Solana being the ghost chain, well, that myth, guys, it's dead, right? Solana is the most used blockchain on the planet, hands down. Why is it still cheaper than Ethereum? I don't know. But users are only part of the equation. Trading volume tells the same story. Year to date, Solana's DEXs have processed over $800 billion in volume. Year to date, not in its lifetime, just year to date. A nearly 400% increase compared to the same period last year. Protocols like Jupiter, Radium, and Orca are setting the pace for the entire on-chain trading economy. Now, let's look at stablecoin velocity. This is where Solana absolutely crushes every other chain in terms of pure transactional throughput. In 2024, the network settled more than $11.5 trillion in stablecoin value with only 1.8 billion in supply. That means each stablecoin in Solana changed hands over 6,300 times compared to just 122 times on Ethereum. When fees drop to as low as a penny or below, a new class of trading, payments, and DeFi become possible on a global scale. User activity, on-chain trading, and payment velocity all confirm the same thing. Sol is leading the market, and that gap is widening every week. And yet, even with all the on-chain and macro momentum, the technical roadmap for Solana is massively underappreciated. We have talked about it here multiple times before, but we're going to go over it again. Firedancer, the new validator client from Jump Crypto, is scheduled to go live this year, bringing the network to over 1.2 million transactions per second. Like, this is insane, right? Back when Ethereum was like the only game in town, we were thinking, oh man, we need to get up to Visa, MasterCard's throughput to be usable on a global scale. That's like 40,000 transactions per second. We're talking about 1.2 million transactions per second with Firedancer being integrated. Like, we're there. So we have Firedancer, but also Alpenglow is next. It's a consensus upgrade that will remove vote transactions, cut finality times in half, basically, and increase overall network stability, which is important for all the times that Solana has gone out, making Solana's monolithic L1 even more attractive compared to the fragmented, bridge-dependent L2 approach of Ethereum. And that is a huge point, right? Ethereum's scaling solution is L2s. And man, it's not a nice user experience. You have to bridge your capital from ETH to ETH layer 2 and Base and stuff like that. This is why Solana is just light years ahead, because they're so focused on user experience. It's huge. It's a huge deal. We'll get into that too when we talk about something called bullets later on. You'll see why it's so impressive. But it's not only about speed. Solana is quietly becoming the go-to infrastructure for traditional finance. This is very important. Visa is now expanding stablecoin settlements to Solana. Kraken is launching tokenized stocks as SPL tokens, or essentially Solana assets. And Superstate is pioneering SEC-compliant equities on-chain. And there's another leading indicator as well, developer activity. According to Electric Capital, which we had Vishal on the channel a couple weeks ago with Chasse for Dragonfly, but they just put out a report saying that Solana just surpassed Ethereum for the most builders entering the ecosystem. This is the first time it's ever happened, and this is a huge sign of where things are going. So after all of this we just talked about, you're probably saying, Kyle, like, why not just buy ETH, or are you buying ETH? Well, yes, I am. Why? Because I think that does Facebook still have 6 billion users? Yes, right? Like, is Ethereum still going to have tons of builders? And yes, 100%, right? But I also think that Solana is going to do extremely well. And today we're talking about Solana, and these reasons are the reasons why. There's a core truth emerging every new cycle. Most of the speculative capital in crypto is getting diluted. With every airdrop, L2, a meme narrative, the number of tokens keeps exploding. But here's the paradox. While the opportunity set grows, sticky capital and institutional flows and value-driven allocations are getting more concentrated than ever. For all the hype, the reality is simple. Fundamental-driven capital is finite, but the number of targets keeps multiplying. So what happens next? The ratio gets lopsided, and capital migrates toward those rare protocols that deliver business results, revenue, category leadership, and a credible protective moat. You can see it playing out right now. Look at Sol's chart. Then look at the handful of Solana native names pulling in the biggest on-chain revenue and the most persistent user flows and the most institutional attention. The rest, it's down only, except the occasional short-lived meme runner. On a long enough timeline, this is the ultimate repricing. Only a few will lead, and everyone else will fade into irrelevance. So how do you find the right side of capital rotation? The answer is simple. Follow the value. Focus on the assets with proven cash flows, protocol stickiness, and defensible market share. In ETF Summer, which we're seeing right on the corner, concentration is everything, guys. The only thing worse than being late is being spread too thin and not having high enough conviction in the tokens where you're allocating the majority of your investable liquid net worth, which is this barbell strategy that we talk about, right? Most of it should be in high conviction plays and like 15% or something in your more higher risk, higher reward tokens. And this brings us to Solana category leaders already attracting all the capital. I think they're about to get a violent repricing. As the ETF narrative accelerates, let's take a closer look at who's pulling away in the pack. If you're hunting for real yield, institutional relevance, and protocol innovation, it's hard to find a Solana asset with a stronger business case than Jito. Jito is Solana's premier liquid staking and MEV protocol. What does that mean? It doesn't really matter. But when you stake SOL through Jito, you receive Jito SOL, a liquid staking token that not only pays standard network staking rewards, but also delivers a share of MEV, which is, if you're wondering, it's called maximum extractable value, whatever. It's just a DeFi terminology. Bottom line is you get more revenue and token buybacks and revenue share. Jito SOL consistently outyields every major competitor. And with 2.98, almost $3 billion in TVL, total value locked, Jito now secures more stake capital than any other protocol on the network. But what really sets Jito apart is tokenomics. The Jito Foundation is actively exploring a direct value accrual mechanism for the token JTO, ticker JTO, using a portion of protocol revenue for open market buybacks. This kind of model that bridges DeFi's real yield narrative with traditional finance's obsession with share buybacks, aligning token value with protocol revenue in a way that sticky capital craves. The protocol has a history of giving more yield to stakers than any other liquid staking option on Solana, and its MEV distribution is totally transparent. With Solana's ETF odds skyrocketing, Jito stands out as a foundation for future institutional staking flows. So while the broader market gets distracted by fleeting narratives, sticky capital is accumulating in Jito for one reason. It's the backbone for yield, MEV, and real compounding revenue. As Solana's next cycle kicks off, this is one of the few assets where the business and the token are finally aligned. All right, guys, so next up, we've got Jupiter. If there's one protocol that sits at the beating heart of Solana's DeFi explosion, it's Jupiter. And if you use Solana, if you trade on Solana, you probably use Jupiter. And that's a pretty good sign that it's a good protocol. This DEX aggregator is the main artery for capital flow, and the protocol where user activity and real on-chain volume have become impossible to ignore. Jupiter routes trades across every major DEX and liquidity pool on Solana, Orca, Radium, and every other DEX, and more, to guarantee the best execution and lowest slippage for users. This is why I use Jupiter, right? Why would I go try to find out which DeFi DEX has the best trading setup when I can just use Jupiter and know that they're going to handle that for me, right? You get what I'm saying? And Jupiter is doing $31 billion in trading volume a month on average, making Jupiter both the largest DEX aggregator on Solana and one of the highest volume protocols in the entire crypto industry. Jupiter's tokenomics are designed for direct, transparent value accrual. I really like what Meow is doing, the founder of Jupiter. He's written articles too about how he wants to align protocol success with token success, what everyone should be doing, right? And that is a good sign. So I love what Jupiter is doing. I love that they're aligning the revenue and success of the protocol with the token holders. This is perfect. And how this works essentially is the protocol charges a modest fee on every swap, and 50% of all protocol fees are being used for buyback and burns. I would like to see that eventually go up to 100%. But in the meantime, I know that Jupiter team is building, developing, and they need to use some of that revenue to continue to expand their products. But even with that 50%, what that means is that every uptick in trading volume translates to more buybacks, making this perpetual machine of consistent token buybacks the more successful the protocol becomes. You can better believe as we get into ETF Summer and we get into more of this parabolic bull run that inevitably is coming, that volume is going to increase a lot. Those buybacks will increase a lot. That is a success for a winner. Right now, Jupiter has done $48.5 million in annualized protocol revenue, having a market cap of around $1.2 billion. Jupiter is the ultimate volume to value play. When ETF Summer begins and every major fund or retail user needs to move size on Solana, Jupiter is the way to do it. And the only way to participate in that flow, well, you got to hold the token because those buybacks are going to be doing the work for you. So next up, guys, we've got Camino. So if you want to know where yield hunters are concentrating on Solana, and I know none of us are probably yield hunters, but anyway, it's a thing with people with deep pockets who just want to put their capital to work that you can't do in TradFi. Yep, this is the beauty of DeFi, and it creates an industry. So we're going to talk about Camino. In a year where most protocols were just fighting to hold TVL, Camino actually exploded from $200 million at the start of 2024 to over $2.3 billion today, making it the second largest protocol in the entire Solana ecosystem. If you guys have been a subscriber to the channel for a while, you know that we talked about Camino and Jito when they first launched. And Camino is a full-service DeFi suite built for both power users and newcomers. Lending, borrowing, and automated yield vaults are all seamlessly integrated. And the user experience is so clean that it's become the go-to liquidity layer for the new generation of Solana native traders and fund managers. Its points program, innovative launch collabs, and vault incentives have proven that retail and institutional capital can coexist, and both want access to the best returns. But what makes Camino a true category leader is its roadmap. Permissionless lending markets are coming, allowing anyone to sign up new collateral strategies, and the upcoming Vault layer is designed to let professional managers and DAOs run automated on-chain yield strategies at scale. At the center of all of this is the token, KMNO, their governance token that gives you a direct claim on protocol revenue. And soon, holders will be able to vote on how cash flows are allocated, meaning the token, KMNO, gives you a real stake in Camino's future business. Basically, think of these things like now when you have the capital and revenue tied to the token, think of these just like stocks in a way. In a market where capital is desperately searching for scalable, revenue-driven protocols, Camino is positioning itself as the blue chip lending and vault program on Solana. But capital concentration doesn't just apply to blue chip protocols. In every cycle, there's always one wild card that ends up attracting all the high volatility speculative energy. And this time, that magnet, for better or worse, is Pump. Now, let me be transparent, guys. Pump.fun isn't my favorite protocol. Check out this video I made to understand why I'm not putting my core allocation here and why I've got the feelings on it that I do. But if you want to know where the most aggressive risk capital is concentrating, you have to follow the numbers. And by that standard, Pump, the token, ticker PUMP, and the Pump.fun ecosystem is already one of the most profitable businesses ever built in crypto and in the world, essentially. Before the token has even launched on spot markets, Pump is trading pre-market on Avo. Pump.fun's cumulative revenue and user flows already put it in a league with top blue chip DeFi platforms, and the demand for Pump's token launch is off the charts. This thing was going around like crazy at my private groups when you saw what they were raising for, at what valuation, et cetera, et cetera. And the data speaks for itself, guys. I mean, Mizari's model projects over $675 million in protocol revenue within 2 years, with some on-chain analysts calling for a $7 to $20 billion FDV if meme season fully reignites. And again, for better or worse, I think it will when we have retail come flowing back in again. It's inevitable. And for all the jokes and memes, like this is serious money and it's serious market share. This is the picks and shovel of shitcoin mania. Right? And here's where I draw the line. Tokenomics. If the team executes, ensuring revenue actually accrues to the token and incentives aren't siphoned off by insiders, this becomes a real contender for one of the highest conviction plays of ETF Summer. Again, this is just if you want to make money, and we'll look at it. We'll look at it when it launches. We'll see what valuation it's at. We'll give you my opinion at that time. But for now, we're just briefing you about it because it's coming. And again, for better or worse, this is the reality. And guys, if Pump is the meme ecosystem business that's printing real revenue, then Fartcoin is the purest play on mimetic dominance and narrative stickiness we've seen this cycle. Now, before you turn off the video, just sit here with me and I'll explain to you why. It's the stickiest, it's the craziest, and yesterday was just a confirmation of this, and I'll show you guys some memes in just a second. But after looking at where aggressive risk capital is gathering in Pump, let's talk about what happens when all the mind share, all the volume, and retail energy converge into a single, absurd, unforgettable asset. Fartcoin isn't a protocol I'd ever put into the blue chip bucket, but you can't ignore these numbers. Despite only a few tier 1 exchanges, Fartcoin has achieved a market cap over $1 billion. With daily spot volume between $150 million to $500 million. That's daily trading volume. It's crazy. And perp volume consistently ranked among the top meme assets in all of crypto. At its peak this year, it hit $2.6 billion in market cap before a full capitulation washout and reset to $200 million. But then sent it back up over 7x to $1.5 billion. And right now it's currently sitting at $950 million or something. And this is wild. While the S&P fell 21%, and most risk stats were bleeding, Fartcoin rallied off the lows, 5x. This is the kind of relative strength that's never an accident. It's a signal that meme season when it's concentrated and frictionless, can outperform even in the face of broader market drawdowns. And what makes Fartcoin so sticky? Its architecture is unruggable. All liquidity, it's already on chain. It's not held by investors or anything like that. Fully diluted supply. And there's only one Fartcoin. And the narrative is so dumb, it works. I mean, hot air rises, farts go up. In meme coins, attention is the asset. And Fartcoin's mindshare is off the charts, outperforming Pepe and even Doge for pure memetic presence this year. Let me show you guys a couple of these memes that came across yesterday and the day before when we had this announcement, basically that that Franny and Fetty Franny and Fetty, whatever the mortgage guys are, were going to allow crypto to be used as collateral for housing loans, which is fantastic, which is a huge news for me. This is like the best thing that's happened all year when it comes down to, for like me personally, and for you guys, if you're largely allocated into crypto like I am, and you have very little money in the bank like I do, and you want to buy a house, like, oh my God, I'm telling you, I've been in America for 2 months already, and just getting a lease on a place is a nightmare, right? These kind of forward-moving things are really good for what's happening. But let me show you this. So this one from Dipular says, when your parents try to get you to meet their investment advisors, but you've already made 22,000% on Fartcoin.
Don't know what the fuck they're doing. You understand that?
Okay, and then you've got this one, crypto degenerates after institutions start accepting Fartcoin for mortgage collateral. And this is the guy from The Big Short, and this is the U.S. federal housing FHFA thing that I was just talking about. These mortgages are solely collateralized with Fartcoin and SPX 6900. SPX 6900 is another good one, but right now, just looking at Fartcoin. This is also from The Big Short. If Fartcoin dips below 80 cents, the entire housing market collapses. I mean, these were everywhere yesterday. And then this guy, you approved the mortgage based on his bag of Fartcoin. This is how my realtors look at me right now, by the way. When I show up and show them my portfolios and they just look at me like, huh? But isn't this magic internet money? Like, what? Anyway, like I saw these everywhere yesterday, right? And you don't see that with Pepe, you don't see that with Doge, you don't see that with anything else. So it's important to look at the raw data. And so if you want some exposure, right? Like forget these 10,000 market cap coins, like these low meme coins that don't have a track record or history or something like this that's still making people laugh, a year after the thing was launched. To me, this is one of the strongest things, and it's sitting at a $950 million market cap right now. We first covered it over here. If you guys see at 55 million, I bought it at 46. So barely in profit right now, right? I bought it 4.7 cents, and it's 5.6 cents right now. So don't feel bad. I think it's still probably a pretty good entry. We'll see. I'm definitely, you can see this is definitely more speculative, but 5.5 cents, I do think it's covered it at $55 million, and it went to $2.5 billion. Right. So again, for people in the comments who were just complaining about how based AI took shit the bed, yeah, I know it sucks, but get over it and like move on. We've had plenty of other great calls on here, that being one of them, and still. So and I hated this narrative so much in the beginning. To be honest, like I really hated it, and that's one of the things that made me realize that maybe I should be allocating to something because it's so popular and it's so dumb, and this is what we call hated rallies. Right. And I think that it's very possible this thing goes another 10, 20, and depending on how irrational and how exuberant the markets get, you could see this thing going at 20, 30, $40 billion in this super irrational, if you guys haven't been around in a 2017 or 2021 bull market at the peak of irrational exuberance, anything is possible, right? You're sitting here right now going, Kyle, that sounds so stupid. Fartcoin is going to a $30, $40 billion valuation. Yeah, right. I tell you, when you've been in the space as long as I have, nothing is out of the realm of possibility. Nothing is out of the realm of possibility. But I can tell you, holding nearly a $1 billion valuation right now, and for memes being as low as they are right now across the board, do I think there's a lot more upside in this? Yes. Do I think it's the most memetic meme coin on the market right now? Probably yes. Is it going to make crypto bros laugh when it's outperforming everything on the S&P, gold, silver, oil, everything? Yes. And then eventually, while everyone at Goldman Sachs and JP Morgan and BlackRock, while they're out there recommending Bitcoin and Ethereum and Solana to their high net worth individual clients and saying, yeah, guys, you should allocate, 3 to 5% of your net worth into crypto, they're going to go home and they're going to go buy Fartcoin by themselves, right? It's just the way it works. But I want to tell you guys something too. These things like Fartcoin, and if we do decide to buy Pump later when it launches, these are things that are going to die really hard when the market corrects. And the market will correct. And things like Bitcoin and Ethereum and Solana, they probably won't correct as bad as we've seen in previous cycles. But these things like Fartcoin and pump.fun will completely die unless they innovate and build new products. But if the model is the way that it is right now, it will completely die when people get wrecked, when the market corrects, and everyone packs their shit up and goes home, and all the tourists are gone. There'll be no more utility for pump fund. No one will care about it. A small group of crypto degens will still use it, right? But those two things, especially Fartcoin and pump fund, are extremely market dependent, in my opinion. And I think that there's something that we need to make as more trades versus everything else we mentioned previously is actually more bullish for long term. Like you could hold those multi-cycle and you're likely to still be in a good place. You hold these things, Camino, Jito, Solana, etc., for the next 5-10 years, like you're probably up way more than you are even holding through corrections, right? We are going to try to sell when the market goes up, and we are going to try to take some profits, right? And we're going to try to position and play the market and capture and retain as much wealth as we can. But nonetheless, that is how I see these things. These things like Fartcoin and Pump, extremely market related based, right? It just depends on how much irrational exuberance we have in the market. And Fartcoin isn't even listed on Binance or Robinhood or Bybit. It's just, but it is, even though it's not, it's still out trading most other tier 1 tokens on tier 1 exchanges. So the upside of Fartcoin, at least in the short term for how we're trading this, could be absolutely explosive. And it likely is to be, right? I mentioned XPX 6900 a little bit before. Now, I'm not trying to go into full degen mode here, but I do think that on Solana, those two have probably the best chances of outperforming. Like those would be like blue chip memes, I guess, if you could say that on Solana. And guys, Doge reached 40 billion and then 80 billion, right? Like it's completely rational to think that something on Solana is going to actually outperform as well. Okay, and we have a bonus one, guys, for you today because I think it still has a long way to prove itself. But I've been accumulating a little bit over the past month or so. Ever since the first time I heard about it was the interview that I did with Avishil and Asib from Electric and Dragonfly. And Avishal mentioned this project, which is called Zex. The token is Zex. It's called Zeta Markets, but they're rebranding to Bullet. And as you guys can see over here, like Zeta is evolving into Bullet, right? And I'm about to explain what that is. Essentially, this is what I see the future of trading natively on Solana looks like. If you pay attention to Bullet, like Bullet is what they're rebranding to. And Bullet is a dedicated extension on Solana. What is an extension on Solana? It's kind of like an Ethereum layer 2, but unlike Ethereum layer 2s, it's way faster, way cheaper. And the beauty is, what I think is just freaking phenomenal from Solana, is the way that they're doing these layer 2s is you don't need to bridge your money through a bridge to get into the Bullet layer 2, essentially, or the extension as they call them. No, it runs all the logic and does everything it needs to on its own like isolated layer 2 chain, but you can just still use your Phantom wallet the same way you always have. And to the end user, it doesn't even understand that it's on a layer 2. That bridging happens automatically behind the scenes. Freaking amazing. This is why I use that MySpace and Facebook analogy between Ethereum and Solana. And then let's even go further into things like, TikTok and X, right? Because let's say Ethereum is Facebook or something, right? Like it's just for the older people, and like that's kind of what it is actually. Like Ethereum's still going to be great. It's still going to do extremely well. It's going to have institutional capital, but it's like longer posts and slower. And this is like, your grandparents use it mostly, right? And then you go to like TikTok, and that's where all the young, that is a perfect analogy, right? Perfect analogy. Like people just like TikTok, even though I don't use it, but I guess I'm old now. Right? So what is, okay, so think about Bullet, kind of like Hyperliquid, right? But Bullet delivers trades in as little as 2 milliseconds. That's faster than Binance, faster than Hyperliquid, and over 100x quicker than any Solana DEX today. Every trade is verifiable. Every fill is backed with zero knowledge proofs. What does that mean? It's just important for on-chain transparency, with settlement and security still anchored by Solana's layer 1. The team that's gone through this has been through the gauntlet and back. Like, they've been through crypto winters, and they made it back stronger. They built Zeta Markets, which is what I showed you initially, which are branding away from, but they've done $15 billion in perpetual and options trading. They survived FTX. They saw firsthand when crypto needs on-chain markets that are fast and reliable, just like Sex's, but they don't compromise on self-custody or transparency. Bullet is that next step. It's this network extension that I talked about. So it is a layer. It's like a blockchain of its own, right? Which is important when we think about valuations. But this one's purpose-built just for professional trading. And it's not just the founders who see the vision. You have backers from Solana's co-founder, Anatoly, for example. You got Jump Capital, Electric Capital, Solana Ventures, and Wintermute, who all put money and back this thing, right? And for a long time, as Avishal said on the interview that we did with him, it took these guys a long time to find product market fit, but you're starting to see attention come back to it right now. That's why I think this is kind of a higher risk, higher reward opportunity here. Let me show you. So is this token Zex anywhere close to the adoption of Hype? No, not even close. That's why I say there's this higher risk reward ratio here. But it's faster than Hyperliquid. Hopefully they learned from a lot of things Hyperliquid is doing. They've got a $100,000 trading reward pool coming up for people trading on Bullet. And you can see over here that if it were to get to just where Hype is today, and Hype probably has another 5 to 10x in it in the bull run. So is it unreasonable to say that if Bullet gets some degree of traction, that in a parabolic mania where Solana is just ripping and people are going, oh, what's the Hyperliquid of Solana? Well, that's probably Bullet. And Jupiter's doing one too, but Bullet's getting a lot of traction. And they're building their own extension, which I think gives them a unique edge. But it's almost 400x to get to the current market cap of Hype. So it's an asymmetric bet. I would maybe just watch this one really closely. I would probably just layer in like I've been doing. I haven't put a ton of capital in there, but I've been putting in a little bit here and there over the past few weeks since that interview. I was made aware of it. And I mean, just think about it. What else do you see out there that has some solid backing, solid group of market makers, a lot of people who have incentive to see this thing do really well? Could it do a 400x? Maybe, I don't know. But I think it's interesting. And that's something that I'm putting money into myself. So that's Bullet, right? And so why does this matter for ETF Summer? Because Solana's next big wave is institutional and pro level flow. Up until now, most of that activity has still happened off chain because DEXs couldn't compete on speed. But Bullet, it gives Solana a legitimate shot at being an on-chain NASDAQ, an execution layer that finally matches experience and performance of top sexes while still offering a true DeFi transparency. So the bottom line, guys, is in a cycle that rewards capital concentration and category leadership, Bullet could be the protocol that makes pro trading sticky on Solana. And if ETF Summer brings a wall of serious money onto the chain, Bullet is where you'll see order flow move first. Out of all the projects I've covered, Bullet comes with the lowest market cap by a wide margin. Again, where this is also probably the most risk. They still have the most to prove. Everything else we've talked about so far has a lot more traction. But look at this chart for a second. What does this show you, right? And we're only talking about a $31 million market cap, 32 million or so. Insiders started to wake up, right? When we look at on June 10th, essentially, June 11th, June 10th, it's spiked a lot, right? And it's come down a little bit, but the point is that this thing is starting to pick up traction, starting to pick up attention. And this tells me that some people know or have a feeling, or at least are speculating on the future potential of this protocol. It's just starting to pick up some pace right now. So where does all of this leave us? As Solana ETF Summer ramps up, after seeing the capital concentration, the real business metrics, and the relentless push toward value-driven leadership, things are clearer than ever. First, stick with the winners. If you want to catch the next leg of the cycle, you want to be positioned in a handful of category leaders. Jito for real yield and MEV. Jupiter for volume and protocol buybacks. Camino for the blue chip DeFi lending. And for those who want exposure to the high risk end of the spectrum, we've got the memes like Fartcoin and the picks and shovel for the memes like Pump. But again, Pump we'll get back to when it launches and we'll assess it then. Second, don't get distracted by the noise. The days of everything pumping together all at once, they're probably over. Stack exposure on assets with defensible moats, real product market fit, and proven ability to compound value. Third, size your risk appropriately. The majority of your high conviction capital should be concentrated in the business leaders and sticky protocols. Your high beta moonshot buckets, Pump and Fartcoin, should be tightly managed. Again, Pump, not totally convinced on it yet, but again, we'll come back to it. But these should be tightly managed because this cycle, you want to enjoy the ride while sleeping peacefully on your positions. And fourth, stay agile and informed. Monitor every ETF headline, and we'll bring them to you guys here first. Every FiDance or test update, every new wave of RWA or institutional partnership, watch for tokenomic updates, protocol buybacks, and ecosystem growth signals. And we'll let you guys know here if these things change and our position changes, our mind changes, right? If we think one of these is now going to be horrible, we'll let you know. In a market this fast, being early is everything, guys. If you've got value from this breakdown and you're not subscribed already, subscribe to the channel. We make these videos 5 days a week at least, right? And if you got value from this and you're already a subscriber, do me a favor, destroy that like button. Leave me some comments below what you thought of the video. What did I miss on Solana? What should I cover next? Curious to hear you guys' thoughts. I do read all the comments. But the bottom line is, guys, that Solana ETF is coming. And even though, like, one of the things that I challenged the research team on today when we were going over this video was, well, what about BlackRock, right? What about BlackRock? Because if you look at the majority of the ETF inflows for Bitcoin and Ethereum, the majority of it comes from BlackRock and Fidelity. Fidelity has started the process of their Solana ETF, but BlackRock has not. And when you look at the price of Solana, it reflects that. It's a stage of disbelief, apathy right now. But you guys are hearing it here first. And there's going to be a demand for Solana, and BlackRock will come in probably last minute, slip their application under the SEC's door. They're going to get approved just along with everybody else. I would be shocked if there is a Solana ETF approved in America and BlackRock's not there to capitalize on the opportunity. After all, their objective is to make money. When you look at the numbers of everything that we covered today, it would be a silly business decision if you're BlackRock not to get involved. But the point is, when BlackRock does put their application in, you better believe the price of Solana on that day jumps 20, 30, 40, 50%. Again, do you want to get in after that or now? That's the bottom line. And when this ecosystem pumps, the things that we talked about today will pump even harder. Their beta plays on Solana. That's it, guys. I'll see you tomorrow.